Hey folks, welcome back to the Financial Freedom Channel, where we make your money work hard for you. So today I want to talk about stocks I'm excited to buy when the market goes down. Now, Ray Dalio said a few months ago that he thinks there's a 70% chance that before the next US presidential election in 2020, the market has a 70% chance of going down. There's a 70% chance of a recession coming up before the next presidential election. Now, for me, that's really exciting because I'm going to be prepared. Now, when a market goes down like this, that's when investors have an incredible opportunity to build a lot of wealth very quickly. So I'm going to share which stocks I'm excited about today. And before I do that, I want to talk about Warren Buffett and Berkshire Hathaway. So Warren Buffett learned how to invest from a guy named Benjamin Graham. And Benjamin Graham's whole investment philosophy was, all right, I want to find something that's super cheap. Basically that I can buy below what the components of the business are actually worth, below scrap value. So that's how Warren Buffett started investing. Now, a number of years later, he met a guy named Charlie Munger. And Charlie was able to convince Warren that it's actually more profitable to find companies that are high quality companies that you can buy at a fair price. So the story goes, Benjamin Graham would walk into a store. He would find the cheapest thing in the store, and then he would walk out with that item. Now, Charlie Munger, when he would go into a store, he knew exactly what he wanted to buy, and if it wasn't on sale, he would leave without buying anything, and he would keep going back day after day until the thing that he wanted was on sale. And so that's how Berkshire started investing in companies. They would wait until that company was at the right price. So they buy quality businesses at good prices. So I want to talk about, and I've talked about him before, but a guy named Mohnish Pabrai. Now, I've been watching his lectures. He puts out about 2 or 3 lectures a year on YouTube. And he's got, in a recent lecture, one of the things he covered was there were 5 categories of businesses that he could separate that can become huge multi-baggers. So companies that are going to go up 10 to 100x, multiples of what they are today. And I'm going to talk about the first 2 of those categories. So these are buckets where it makes a lot of sense to shop in for high quality businesses. So the first category is companies that have extremely wide and deep moats. Okay, wide and deep moats. Where the economics are so good that they can be run by idiots, okay? Can be run by idiots. And often have been run by idiots. And because the economics are so good, the idiots cannot destroy these companies. So a few examples. What are these companies? Coca-Cola is one. Moody's. Back in 2007, 2008, Moody's, they screwed up big time. They were giving these high ratings to investments that were just basically crap. And still the business survived and even thrived afterwards. So, you can't kill this company. The profit margins are incredible. Visa, MasterCard, American Express. these are companies that have very wide and deep moats. The economics are incredible. They can be run by idiots. These are the companies where they're usually not cheap, okay? But when they are, if there's a market correction, a recession, a market crash, when these companies become priced to sell, that's when you want to jump on those companies. So that's the first bucket. The second one I want to talk about is the same, wide and deep moats. So they have very wide and deep moats. Okay. But they can't be run by idiots. They have to be run by great managers. Okay. Now, what companies are these? These are companies like Amazon, Costco, companies like Domino's Pizza. We got Marriott, Yum Brands. So these are companies, they have excellent economics, just like the ones above, but they need great management. They cannot be run by idiots. So, here's some companies that I'm definitely going to be watching when the market starts to go down, when we enter a recession. And I want to talk about how I'll be comparing these companies. Obviously, a market crashes, some of these companies may go down by 30%, some may go down by 50%, some may go down by 70%. But how do I compare, apples to apples? What is the best deal? What are the best deals here? So this guy, Joel Greenblatt, wrote a book called The Little Book That Beats the Market. Okay. Now, in this book, he talks about two ways to find which companies are the best buys. There's two metrics here. So really we're looking for, I'm going to get rid of this so we have more space. So according to Greenblatt, we want a combination of good and cheap. Okay? We want quality businesses at a good price. Okay? So the way we determine what cheap is earnings yield. And this is defined as EBIT, earnings before interest and taxes, over enterprise value. Okay? Now, enterprise value is very, very closely tied to stock price. So obviously when the stock price goes down, that's going to make this number go up. The bottom's going to go down. This earnings yield is going to go up. So that's great. When a market crashes, we're going to increase our earnings yield. So that's a way to define cheap. Good, we can look at return on invested capital. Okay, so that's going to be the same thing. EBIT, earnings before interest and taxes, over invested capital. Now, Joel Greenblatt, the guy who wrote this book, who came up with these two metrics as a way to determine what to buy, he has a website called magicformulainvesting.com. Now, you can sign up for a free account there, and there are some tools where you can define, okay, I want to see which companies score the highest in this combination of metrics above a certain market cap. So that's a really cool tool. I would suggest you go sign up for a free account at magicformulainvesting.com. But there's another one, magicdiligence.com. Okay. Now the problem with Joel's website is it doesn't break out, what the earnings yield is and what the return on invested capital is. So if you have, say you have a group of stocks that you want to compare to each other, it's really helpful to be able to figure out what the earnings yield is for each stock and what the return on invested capital is for each stock. So if you go to magicdiligence.com, you can type in the stock ticker and it'll actually calculate for you what the earnings yield and what the return on invested capital are. So that's what I plan on doing. When the market crashes, those companies I listed before, I'm going to be looking at those at Magic Diligence to see what the earnings yield is, what the return on invested capital are. And I just want to write, there's a few other companies that I'm going to be watching when the market crashes. Companies that I'm excited about. Apple. SPGI, which is S&P Global. Google, really like Google. Love, which is Southwest Airlines. Facebook, everybody loves Facebook these days. ALGN is Invisalign, so they make the invisible teeth straighteners, retainers, braces, invisible braces, if you will. Microsoft. I think they stand to benefit quite a bit from the blockchain revolution. And then the moonshot here, Tesla. Now this, since their earnings they aren't where they need to be yet, this is more of a gamble. I wouldn't put anything more than 2 or 3% into Tesla, most likely. But I do really like Elon, and I want to be involved with that company. I really like Tesla. So that's all I wanted to share. For stocks I'll buy when the market crashes. Let me know when you think the market's going to crash. If I had to guess, I think we've got at least another year of rising stock market. I'm thinking probably mid 2019 to the end of 2019 is when things are going to start to get pretty shaky. Obviously, with the political situation, with what's happening in Syria right now, there's a lot of political unknowns that can really affect the stock market. But anyway, that's what I've got, guys. Leave a comment. Let me know what you're going to buy when the stock market crashes. And hit that subscribe button so you don't miss any videos. And I'll see you next time.